Welcome to Get Rich Education. I'm your host, Keith Weinhold. Rents are up nearly 8% for detached single-family homes. I discuss a jaw-dropping estimate from the NAR on just how undersupplied American housing is today. Then, the venerable and sage-like Jim Rogers joins us from Singapore about real estate, the direction of inflation, interest rates, and your economic future today on Get Rich Education. You know, a lot of investors choose either cash flow or home price appreciation, but one real estate market could provide both: Jacksonville, Florida. They've got 27% lower home prices and higher rents than the national median. Their market has appreciated 34% more than other comparable cash flow markets over the last 30 years. Get positive cash flow today and above average appreciation for tomorrow. They often have available inventory in Jacksonville, if you can believe that. Start at cashflowandgrowth.com. You know, starting in real estate seems hard for some. Even experienced investors can find it difficult to achieve the success that they had hoped for. What if there was one small change everyone could make that would solve these challenges? Allie Boone offers a book that really no one else has. It's an easy-to-understand glimpse into the real estate investing industry and your mindset. It's life lessons on hacking your mind before you hack your wallet. Her book to grab on Amazon is called Not Your How-To Guide to Real Estate Investing.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to GRE, from Scott, Quebec to Scottsdale, Arizona, and across 188 nations worldwide. I'm Keith Weinhold. This is Get Rich Education. Hey, my personal inflation rate recently edged up higher. Yeah, when it came time to pay for my chicken and bacon ranch melt sandwich at Subway restaurant, which is always on flatbread, by the way, for the first time in my life, decades of going to Subway here, I was asked to leave a tip. And I was surely the only customer that day to excitedly point to the payment terminal and frantically yell, "Look, this is not a transitory phenomena. This is indicative of real service inflation." Well, that's not what I yelled or said. It is what I thought anyway. Yeah, more restaurants that don't even provide waiter service are asking for a tip. And, you know, I just wait for the day when they ask for a tip at the grocery store checkout. I have not experienced that yet, and I've got no problem with leaving a tip. Actually, the upside of leaving tips for service workers is that it's a small wealth transfer from higher income people to lower income people, and I don't know that that tip amount is being accounted for at any of these government inflation measures like the CPI, which is the most highly reported one, or the core PCE. That's the measure that the Fed uses to help them determine interest rate policy. And it's certainly not in the PPI, the Producer Price Index, which is how much it costs producers to make stuff. But see, I was probably one of the few Subway restaurant patrons on that recent day to understand that inflation actually benefits my personal economy overall, because it does not benefit most people, but it benefits your personal economy and it benefits mine. To everyday consumers, inflation makes them drift closer to poverty. Prices go up, products shrink, and more restaurants are asking for tips. To savvy real estate investors, inflation makes us drift closer to prosperity. That's what you and I are doing. Real asset prices balloon, debts debase, and rents spike. In fact, single-family home rents just saw their largest gain in almost 15 years. Year over year, they're up 5.3%. Now, that's for single-family homes overall, but rents for detached single-family homes, so not townhomes, they are up a whopping 7.9% over the same period, and that's all per CoreLogic. They gave us the data. And as is often the case in real estate, there are even more ways to divide and parse the numbers. Rent increases were greater in higher priced homes. They do not tend to be the ones that make the best long-term rentals. And then the gains were highest in Phoenix, Tucson, Las Vegas, and Atlanta. But suffice to say, a 7.9% annual rent increase is rather good for us landlords. We're not just seeing higher consumer prices, we're seeing higher wages. Like with this growing list of companies that say that they're doing the $15 minimum wage for their employees, even if their state is not, like Amazon and Facebook and Starbucks and a lot more. Those higher wages then translate into meaning that your tenant has a higher capacity to pay the rent. Now, the NAR recently reported about just how many housing units short that America is from meeting demand. A lot of people figured it was probably 3 million, maybe 4 million housing units short by now. Well, they have figured that America is now short a whopping 6.8 million homes. This is what decades of chronic underbuilding has done. The likely obsolescence of available homes in coming years, that risks exacerbating this already dire situation. Builders can still solve the problem, but this report, it suggests it's going to take a Herculean effort over the next decade just to bring us into balance again. And gosh, what does it say when the United States, the most powerful nation in the world, the biggest brand in the world, the place where people want to emigrate so badly that they'd risk their lives for it, the nation with the world's most powerful military and all kinds of space exploration, entrepreneurship now, all these accomplishments and all this aspirational stuff, and yet we have trouble housing our own people. 6.8 million housing units short. Just remarkable. Hey, well, maybe that makes legendary investor Jim Rogers grateful that he emigrated to Singapore? Who knows? My life's still pretty good in the United States, by the way. Straight ahead, it's Jim Rogers from Singapore, so I expect more of a global context to today's chat. Unlike most of the interviews here, this is one where you can watch the renowned preeminence of the legendary Jim Rogers and I together in video on our YouTube channel. Check out our Get Rich Education YouTube channel if you want to see us together, Jim and I, on the GRE podcast straight ahead. Hey, is your IRA in a real estate syndication? Yikes, a 37% UBIT tax could hit you, but you still have a chance to set up your EQRP and avoid this. Did you make too much money in 2020 and need more deductions? Now federal law lets you set up an EQRP in 2021 and get deductions for last year, retroactively. Even put old IRA and 401k money in Bitcoin, gold, or your own business. Get control of all of your retirement money, tax and penalty free. Text EQRP in all capital letters to 72,000. The people that our listeners can't stop talking about are Ridge Lending Group, NMLS 42056. They've provided GRE listeners with more loans than anyone, and it's where I got my last few loans. They finance single-family income property up to 4plexes. They're the #1 lender for beginners and veterans. Start your pre-qualification, chat with President Chaley Ridge personally, and get your custom plan for expanding your cash-flowing portfolio. Start at ridgelendinggroup.com.
This is author Kristen Tate. Listen to Get Rich Education with Keith Weinhold and don't quit your daydream.
This week's guest needs little introduction. He is a legendary business and investing mogul of our time, a Yale-educated prolific author. He co-founded the Quantum Fund and even has his own commodities index and ETF. He's also a prolific traveler visiting some 116 nations. Welcome back to GRE, Jim Rogers.
I am delighted to be here, Keith. It's nice to see you.
It's very good to have you back. You know, you were last here with us in January of 2019, about 2.5 years ago. We were in such a different place then, Jim. We were in the longest economic expansion in United States history then. You mentioned that short-term interest rates were higher than long-term interest rates, and that could signal a recession. A recession sure did take place. So where do you think we're going in the future? We've had this pent-up demand that could be released post-recession. Do we think we're going to see economies roar with things like hiring and growth? Tell us more.
Well, it has been 2.5 years. Things have changed indeed. I'm in quarantine, as you can probably see right now, and a lot of the world is closed down. But Governments around the world have reacted by printing a lot of money and spending a lot of money and driving interest rates to the lowest in recorded history. So things are getting better. They have to get better. I live in Singapore. The airport was closed. Now there are a few flights a day. So that's better than when there were none. So yes, things are getting better. They will continue to get better for a while. The problem, Keith, is that this expansion has lasted the longest in, I'll use U.S. history, in American history. Maybe it's going to go on forever, but unlikely. It never has. So I suspect sometime in the next few weeks, months, things will slow down again and we'll have recessions, which we've had since the beginning of time.
There's always an ebb and flow. It's always cyclical. But now with more economies opening up and this increase that we have in demand, besides all the money printing, the currency creation, like you mentioned, it feels to a lot of people like there are more factors there to have monetary inflation. It's not just the United States that's creating currency like crazy. It's an awful lot of world nations. So what are your thoughts with an inflation outlook? Is that something sustainable, or is that just more of a short-term phenomenon, or doesn't it even exist at all?
As you well point out, nearly every country in the world is doing it at an unprecedented level. The head of the Bank of Japan says he will print unlimited, that's his word, unlimited amounts of money. Everybody is doing it, and historically that has eventually led to inflation. I mean, I don't know if you go shopping, Keith, or not. Maybe your butler does your shopping, but the rest of us know that prices are going up. No matter what it is, for education, groceries, restaurants, entertainment, education, prices are going up again. The U.S. government, and whenever we talk about governments, I'll try to qualify, but the U.S. government says, don't worry, it's not going to last. If you believe them, that things are different this time, that gigantic money printing does not lead to inflation, then you shouldn't listen to me. But I expect more inflation.
Now, interestingly, the term quantitative easing is something that was introduced to a lot of people's economic vernacular back about 12 years ago, coming off the global financial crisis. A lot of people predicted that all that currency creation was going to create consumer inflation, but it really didn't. So do you think it'll really be any different this time? And if so, why?
It did create some inflation. Governments have a tendency and an incentive to lie about inflation for obvious reasons. In the U.S., for instance, many expenses are tied to the rate of inflation. So if the government can say inflation is down, they don't have to pay as much. As I say, maybe you don't go shopping or didn't. Anyway, inflation did come back, and a lot of it went into financial markets around the world. Bonds at the highest level in recorded history. Stocks are booming in the U.S. and most parts of the world. So the money did go somewhere. Some of it went into price increases. Now more of it's going into price increases. I would suspect we're going to see more inflation, but who knows that? By the way, it doesn't go up every month when you have inflation. It doesn't go up every week, but over a period of years, you see price increases, serious price increases.
I've heard some people even speculate with hyperinflation. I think that's a bit extreme. Most people's definition of hyperinflation is like with something with what's happened in Venezuela recently, where you can have hundreds of % inflation per month, not per year, but per month. We haven't had substantial and prolonged deflation since the 1930s after the Great Depression. So a lot of people continue to think to draw a line, draw the trajectory of where inflation's been, and continue to say inflation went out over deflation, but inflation will stay relatively low, relatively muted. What are your thoughts there?
I don't see hyperinflation, certainly not in the U.S. or in most countries, in the next few weeks, few months, maybe even few years. But that does not mean that hyperinflation cannot come back. It always has in some countries. And it probably, right now, if you go to Zimbabwe or Venezuela or some places, they're having hyperinflation. So it can happen. Probably not in the U.S., probably not in most countries. Don't think it cannot happen. Don't say it's so different this time that we cannot have serious inflation, even if it goes back to what it was in the 70s. That hurts a lot of people.
Now, when you were with us here last time, you predicted that interest rates were going to go higher. They've gone lower. But I think you were talking about the long term when you were giving us that outlook. And of course, inflation and interest rates are positively correlated. So if we do get higher inflation, it will take higher interest rates and the Fed raising those rates to tamp down on inflation. Is that all congruent with your outlook? Higher interest rates and higher inflation in conjunction with each other?
That's usually what happens when you have higher inflation. People demand higher interest rates in order to use their money. So it's probably going to happen again. Yes, I would expect that. you are correct in what you said. What I was talking about and what I'm talking about now is, interest rates went down in the U.S. for 40 years. When they turn around, they're going to go up and they're going to go higher for a considerable period of time. I'm not very good at market timing, so I don't know. Maybe you have to watch Get Rich to find out when it starts.
That's right. A lot of people are doing that right now. Now, we focus here a lot on the United States housing market, Jim. We're largely a real estate investing show, so we're very sensitive to things like interest rates and inflation. And interestingly, with what's happened with house prices, I don't think a lot of people would have predicted this great capital appreciation run-up that we've had, especially in times of recession. Jim, I've been pretty quick to point out to my audience that on a nominal basis, real estate prices appear higher, but in a sense, they're really not when it comes right down to consumer purchasing power. And the fact that most people buy a house based on the payment, and that payment's affordability more so than they do on the capital price. Inflation-adjusted home price is not any higher than it was in 2006. Then you've got the lower mortgage interest rates, even under 3%. And of course, wages are higher than they were as well in the 2006 peak. So with American homes now for a new home, the median price being in excess of $370K, do you think American homes are overpriced, about right priced, or below priced?
You know better than I do, Keith, that location. I'm sure that for some parts of New York, they're overpriced. I'm sure that in some parts of Nebraska, they're underpriced. Just depends on where you are and what's going on. But back to what we were just discussing and what I think I said before is, if you can get a mortgage, a 30-year mortgage or a long-term mortgage at fixed interest rates, I strongly urge you to do it during this period when interest rates are at historically low levels. Because if you can lock it in, you're going to be very, very pleased when interest rates start going higher and higher and higher again.
Yeah, that is a really good point. Of course, it's kind of ridiculous to talk about a national real estate market in the United States. We have 400 or so MSAs, metropolitan statistical areas. So indeed, some places in the inland, the American heartland may be underpriced, where now it's more practical for those people to leave Manhattan or leave San Francisco and move to some of those lower priced places that can feel like they're underpriced. You mentioned it, Jim. Tying up the long-term fixed interest rate debt is something that we are fans of here, because especially if we get higher inflation, it's going to debase that debt for you and just inflate it away, even if you didn't pay down any principal.
And your rates are going to go higher. I assure you, in the next few years, I said to you before, interest rates went down for 40 years in the United States. Maybe they're going to go down for another 40 years. I'm skeptical. I'm very skeptical. I would expect that the interest rate trend will be higher in the next several years. So lock it in now if you can.
Many have felt that interest rates really couldn't go much lower. They continue to edge just a little bit lower. Don't know how much longer that is sustainable. Of course, at some point, we need to raise interest rates if inflation does kick in and become higher. So is the Fed really between a rock and a hard place? Must they raise interest rates sometime? But is that going to cause a lot of problems in the economy because so many people have so much debt that could be unsustainable for everyone from consumers to municipalities to federal governments to pay higher interest rates on their debt?
Keith, you are exactly right. But what will happen is the Fed, the central bank, will raise interest rates a little bit. They will tell us that it's good, it's a sign of a strong economy, and that we should be pleased. Eventually, the market's going to take over and take control away from the Federal Reserve, and the market will raise interest rates higher and higher because the market's going to say, listen, guys, we know what's going on. We've seen this movie before. We know how it ends. And the market will take interest rates away from the Fed, take control away from the Fed. And that's when the problems get very serious. And that's when we have a recession again. But Keith, I want to remind you, we've had recessions since the beginning of time all over the world. And we will again, even if some politicians say, don't worry, never again will we have a recession. They've got Ivy League educations, but don't believe them. Don't believe them. I assure you, we will have recessions again. And Keith, the next one is going to be the worst in my lifetime. And I say that not as an alarmist, but in 2008, we had a serious problem because of too much debt. Since 2008, Keith, the debt has skyrocketed everywhere. Even China, which had virtually no debt 20 years ago, now has lots of debt and will have bankruptcies. So don't think it's not coming back, and don't think it's not going to affect a lot of people.
I was listening to you closely, Jim. Maybe I'm taking you too literally. Did you say that the market could be the ones that set the rate in the future rather than the Fed being the one artificially setting these rates? Did I understand you correctly? Tell us about that.
The Fed will be a huge participant and perhaps the most important. But yes, I'm saying to you that central banks do have a lot of power, but at times in history, the market has taken it away. Central banks around the world try to fix currency prices. You know, they say that the pound sterling is worth this, the euro is worth this, the yen is worth this. But sometimes the market will say, because central banks, again, try to fix prices. They try to protect their jobs and they try to protect the politicians. But there always has come a time when the market says, no, no, no. That is not what the euro is worth. The euro is worth this or whatever it is. And then they take control away from the central banks. I have learned that if you bet against the central banks, especially when they're absurd, you're probably going to make money. And the same happens with interest rates. Don't think I don't know that central banks are gigantically important and powerful. But I also know that the market has more money than the Federal Reserve.
Now, this is a paradigm shift for a lot of people, Jim, including me, to think about the fact that the interest rate setting policy could be taken out of the hands or largely out of the hands of the Fed and controlled by the free market. A lot of capitalists will tell you that government intervention in the free market stifles capitalism. When you do things like fix wages, you get higher unemployment. Or when you do things like you impose rent control, pretty soon you get dilapidated neighborhoods because, for example, no landlords have any incentive to improve property because they won't get any more rent. Is that similar to the Fed controlling the interest rate rather than the free market controlling what prevailing interest rates should be?
Heath, you have learned your lessons well. You have observed and understood and seen what's happening. Yes, that's the way the world has always worked. Maybe now the Federal Reserve has power that even I don't understand and we don't understand. There is a theory around called MMT, more money today, and that means, this will never be a problem again. I hope so, but for a few hundred years, 1,000 years, we've always had problems periodically. I suspect we will have them again. And MMT may come along and they may print staggering amounts of money, but in the end, that's going to make it worse. That's going to make the value of money go down a lot.
That's a good play on words. Of course, MMT is modern monetary theory, something that's proselytized by some economists. You just called it more money today. So why don't I just play devil's advocate? What's wrong with more money today? Why not just pave over the world with money? Won't it solve all of our problems?
That's what they say, and it's wonderful. People always come up with theories when things are bad. There was a guy named Marx who came up with a beautiful theory. It sounded wonderful, and a lot of people tried it when things got bad. I mean, nobody wants to be a Marxist anymore because we know it doesn't really work, and people are going to try MMT when things get bad, and it will look okay for a while. Just keep printing, and everybody will say, free money. This is wonderful. This is good news. And maybe it is different this time, Keith. But most things, always, when you have too much of it, the value goes down. And that with money.
There's your recipe for inflation. Tell us more about MMT, modern monetary theory. We have not talked about it on this show at all before. What's the premise there?
The premise is that you don't really have to worry about balancing the budget by selling bonds or raising taxes. The premise is that if you need more money, that you print money. And as long as you do it without abandon, with some kind of sense of responsibility, everything will be fine. You don't have to raise a lot of debt. You just print what you need. It's magic, Keith. Everybody that hears it now does love it. But reality will have to set in someday. At least reality always has set in the past.
Inflation would actually be good for a lot of us leveraged real estate investors, and we've tied that asset with long-term fixed interest rate debt to a cash flowing asset because it'll debase away our debt and it will inflate our asset values of real estate, holding that value relatively against the deflating dollar. I know you've had a lot of affinity for agricultural real estate in the recent past. Do you still hold that? And what are your thoughts about agricultural real estate investing today?
Let me just go back to your statement, which was very true. It will work that way if you have fixed rate debt. If you have floating rate debts, even though everything is being inflated up to better prices, better levels, you are going to get hit with much, much, much higher expenses. And so maybe your neighbors are going to be better off, But anybody with floating interest rate debts will suffer badly. But to agriculture, yes, I'm very optimistic about agriculture. Agriculture has been a disaster for 30 or 40 years. The average age of farmers in America is 58.
Yeah, gosh.
In Japan, it's 66. More people in America study public relations than study agriculture. Agriculture is a nightmare. That is changing now, in my view, for various reasons, partly because we're running out of farmers all over the world, not just in the United States. And that's going to lead to better times. Either we're not going to have clothes anymore and we're not going to eat food anymore, or agriculture is going to get better.
Long term, it's great to invest in mandatory needs. People need to live somewhere with housing. People need to eat food with agriculture. What's a good way to play agriculture? If you want to invest in something agriculture, what's your favorite way in order to be a profiteer from that as far as an investment vehicle, Jim?
I said before, Keith, maybe you should buy property in the Midwest or in the agricultural area. If you're in Canada, you know the agricultural areas everywhere in the world because farmers are going to be better off. And so prices in those areas are going to go higher, whether it's for houses or farmland or whatever. That's what you should be looking at. That's one way to play. By definition, inflation means higher prices for cotton, for corn, for copper, for gasoline, for everything like that. So you can participate by buying commodities. Commodities scare a lot of people, but there's no reason to be scared. There are ETFs that you can buy commodities very easily. If you own agricultural ETFs and the prices of wheat and corn and cotton go higher, you're going to say, wow, this is fun. I'm making a lot of money from inflation. I'm making money from inflation.
From a fundamental supply-demand standpoint, agriculture can make a lot of sense. The Earth currently has 7.8 billion people, going to 11 billion in the year 2100. So a rapidly increasing population, at least worldwide, still for the next 75 or 80 years, while at the same time, the amount of arable land is going down. So you talk about demand up and supply down. They're just some of those basic fundamentals within agriculture. And then you have to get in where you fit in with your preferred crop type or nation you're going to invest in and so on.
You have learned your lessons well. To repeat myself, Keith, even if population doesn't go to 10 million or a number like that, people are becoming better off. And as you become better off, if you're having no food or food once a day or something, you're going to eat. First thing you're going to do is eat more. You're going to eat better. And so the demand for agriculture will go up even if the population stays somewhat level.
As nations continue to develop, they get more sophisticated tastes. They eat more of these foods where it takes a greater energy density to produce them, like meat and so on. So that's a great point. Even with the same population, a stable population, there is more of a caloric demand. More people can afford it. I want to change gears, Jim, and get what your thoughts are on cryptocurrency. That's something that you and I have not discussed before. Despite the recent pullback in, say, the Bitcoin price, the Bitcoin is the cryptocurrency with the greatest market cap. We still had a 3 to 4x run up in Bitcoin in just the last year alone. El Salvador recently came out and said they're going to make cryptocurrency legal tender within their country, although within practice, I don't really know that much is going to change inside El Salvador or not. There was recently a huge Bitcoin conference in Miami where you had 50,000 attendees and prominent speakers like Ron Paul and Twitter CEO Jack Dorsey and the Winklevoss twins and so on. So you and I talked about inflation earlier in the chat here. One way people like to hedge against inflation is increasingly with a cryptocurrency like Bitcoin, where there is a finite supply of 21 million Bitcoins. What are your thoughts? And is cryptocurrency like Bitcoin a legitimate way to hedge oneself against inflation?
First of all money is going to be on the computer, Keith. There's no question. It already is in China. You can't take a taxi in China with money. You have to have your money on your computer. It just doesn't work otherwise. Can't buy an ice cream. Other countries are doing the same thing. And China is actually beginning to outlaw cryptocurrency, accept their cryptocurrency. India the same way. So it's coming. There's no question that it's coming. We've had hundreds of cryptocurrencies already disappear and go to zero. More will go to zero too. We have thousands of them now. Maybe they're all going to work. It usually doesn't work. The world usually doesn't work that way. Money is going to be on the computer, but in my view, it's going to be government money. When the U.S. money is on the phone, on the computer, I don't think the U.S. is going to say, okay, this is money now. But if you want to use their money, you can use their money. That's not the way governments think, or you, politicians, bureaucrats, don't like to lose control. They like to keep their monopoly. And I suspect that that will happen again. So if these currencies, any other, become viable as currency, I suspect the governments will step in. They always have. We'll see. If you're good at trading, and these are nothing wrong with these as trading vehicles right now, and if you're good at trading, do it. But if you think you're going to have the new U.S. dollar, I suspect you're not. There will be a new U.S. dollar on the computer, but it's going to be theirs. I would love for there to be alternatives, but that's not the way governments think.
You bring up a good point that's actually lost on a lot of people. I'm talking about Bitcoin, which is, I'll call it the most successful and well-known cryptocurrency. But how many thousands of cryptocurrencies are out there that died, that went to zero, that don't even exist anymore, and that people lost money on? No one's talking about that because they don't exist anymore.
That's exactly right. And many, even Bitcoins have been stolen from people's wallets, et cetera, et cetera. It may well happen, Keith. I'm skeptical. I would prefer to have what governments approve of as money right now. Because if they make it illegal, I certainly am not going to use the alternative currencies. Just as soon, I'd rather be poor and out of jail than rich and in jail.
Some wonder if cryptocurrency can really be shut down. Maybe this is somewhat analogous to an Executive Order 6102 from about 90 years ago, when physical possession of gold and silver was made illegal by the United States government and confiscated. I mean, you could still own it, but it just wasn't legal to own it. I mean, can cryptocurrency be shut down? Is that realistic?
The crypto people say it's not realistic, that they can outsmart the government. They also said it was anonymous, but as you know, in the last 2 or 3 days that they have found that there was a big heist recently where they closed a pipeline. They demanded money from a pipeline. They got it. They were paid in cryptos. Well, the government tracked them down and has gotten it back now. So the idea that these are, everything is anonymous and can be shielded from the government is being proven wrong more and more every day. It can happen that the government can do a lot of things. I mean, I don't particularly like this at all. Not at all, Keith, but governments do have that power. Can they shut it down? If they make it illegal, you can continue to use it if you want. Most people, and me and others, will not use it anymore. And also, I want to go back recently in Myanmar, for instance, they just closed the internet. Without the internet, you don't have cryptocurrency. Recently in Texas, there was a gigantic storm. And for 4 or 5 days, there was no electricity. But without electricity, you don't have cryptocurrency. You can go down to the shop and say, look, my money is on my computer, but my computer is inaccessible. This guy's going to say, I know you need bread, and I would love to give you some bread and wheat, and everything, and some beans. But you've got to give me money. I'm sorry your computer's down. I'm sorry electricity's down, etc. So the government can do all sorts of things, whether we like it or not. And I don't like it. But facts are facts.
I guess when the electricity's down, it would be difficult for one to do transactions even in their nation's currency, right? I mean, even with the digital dollar really being the most common form. But yeah, with crypto, there is no physical form to fall back on. Jim, you've had a lot of wisdom. You've published so many impactful books over the years. You've traveled to so many nations. I'd really like to know, what do you think that a young person should know today, whether that has to do with investing or personal development or anything else, maybe something that young person's not thinking about? What should they be thinking about or investing their time in?
Everybody should invest their time now, especially in knowing about the world, preferably a second language, because in the world in our lifetimes, in your lifetime especially, is going to be much, much different. I grew up in the United States where nobody cared if you didn't speak English. But in the next 50 years, next 100 years, it's going to be important to know a second language well, and it's going to be very important to know about the world. Most people, when I was a kid, didn't know where China was, didn't care, didn't need to know. That's 50 years ago. That's 80 years ago. That's 100 years ago. That world is gone. So I would suspect everybody, I urge everybody to learn about the world as much as you can. I recently ran into a woman from China who didn't know that Beijing was the capital of China. So there's a lot of ignorance out there. And if you don't know about the world in the next 50 years, you're not going to have an advantage. You're certainly going to be at a disadvantage. So I would learn as much as you can about the world outside of your own country. I would learn about possibly living outside your own country. And I would certainly try to learn another language if you can.
You're preaching to the choir. One of my degrees is in geography, so I often think spatially. And yeah, you're right, Jim, especially here in the United States. I'm sure it's only a minority of people that could adequately point to Brazil on a map, or Spain, or Myanmar, or South Africa, or any of those sorts of places. And it's increasingly relevant in an increasingly globalized world. Jim, do you have any last thoughts for our audience?
To your point quickly, most Americans cannot find the Pacific Ocean on there. They don't know why it matters. They say, who cares where the Pacific Ocean is? Well, they're going to learn. My advice to everybody is to watch Get Rich, listen to Get Rich, because difficult times are coming. You need to get knowledge. And once you get knowledge, you'll get worried. And once you get worried, you'll do something. You'll start being prepared. And the people who are ready will come through difficult times in sparkling colors. Many people got rich in the Depression in the 30s. Most didn't. Most lost a lot. But if you know what you're doing and you're prepared, you will come through the next very bad times with flying colors, and you'll be rich. So get ready. Do your homework.
Be rich in finances and in knowledge. Well, Jim, if our audience wants to connect with you and learn more about you and your books and all the teaching and the investing that you do, what's the best way for them to do that?
Well, yeah, I do have some books. I've done a few books. I have a website, jimrogers.com. I've had a lot of fun in life, and I've had many adventures and had a few successes. I've also had some failures. You can go to my website.
You can learn more about Jim at jimrogers.com. Jim, it's been fun talking about the past, the present, and our outlook for the future. Thanks so much for coming back onto the show.
Get people prepared. It's going to be difficult. Thank you, Keith.
Oh yeah, a few takeaways from the venerable Jim Rogers today. He likes tying up 30-year fixed-rate mortgages. He believes interest rates will go higher in the next few years, is exactly how he put it. He believes that the next recession will be the worst of his lifetime. Now, does cryptocurrency have a brighter future than its present? Well, no one really knows. But Jim basically touched on the concept of CBDCs, central bank digital currencies, and how some nations' governments are nudging closer toward them. CBDCs give governments more control because what it is programmable money. If you watch our YouTube video, you see Jim holding up his phone there. The government could deliver your currency to you by phone and say, for example, if you don't spend your stimulus by Friday, then it comes back to us. You can imagine that the government would have a motivation to get people to go spend that way if there were a recession. This is how UBI, Universal Basic Income, could be distributed. They could tell you you cannot spend any of your money outside of curfew hours. They can tell you that you must buy locally with this government-issued CBDC, say within a 10-mile radius of your home. If you're not saving enough, they could offer you an 8% interest rate. If you're saving too much, they could make you get a minus 2% interest rate on your savings. Reparations for certain minority groups could be easily distributed this way. Take a vaccine, well, then you'll get the stimulus payment. They could limit your travel. They could even say you can't buy dairy products, or they could say you have diabetes, so you can only buy organic. So we're talking about central bank digital currencies here, something that could heighten government control over the people. Now, would that make cryptocurrency like Bitcoin fall out of favor then? Well, no one really knows, but I think you can make the case that these CBDCs would increase cryptocurrency's appeal because people would then have even more motivation to get out of this system of government control. See, today, one big reason that people want to convert their dollars into crypto and into real estate is because they don't like the reduction in their dollars' purchasing power through inflation. So CBDCs, that would mean that the government would have even more control of your currency, and therefore that currency would be less valuable to you because there would be so many limits on how you could spend it. Well, if it's less valuable to you, then that could mean that the CBDC value gets more inflated. And that's exactly why I could make real estate or crypto and maybe even gold more popular, because they're items that typically stand up well to inflation, where you can even profit from inflation like we do here with real estate. But that's the potential future of your money. And the more one tries to predict the future, the more speculative it becomes. But it is interesting to consider where we might be going. If you like the GRE podcast here, I would love to have you as a regular follower or subscriber through your podcatcher with what many tell us is the best real estate investing content around. We also host all of your favorite financial heroes and the biggest names, including Tom Wheelwright, who is coming back onto the show with me here twice in the near future. Taxes are your biggest expense that you're ever going to have in your life, and Tom tells you how to legally take your tax burden to near zero. And he actually talks about taxes in an interesting way, if you can believe that. So I'd love to have you as a podcast subscriber. Check out the Get Rich Education YouTube channel for the entire video that you just heard today with Jim Rogers and I. Also, last week's chat with Blair Singer is on there. And besides all that, there is more free learning on our YouTube channel, in-depth content directly from me, where I sit down and talk directly to you and give you a great free real estate investing education. Video is where we can really break down the numbers and make it more real for you there on our Get Rich Education YouTube channel. I am grateful for your following. Until next week, I'm your host, Keith Weinhold. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.